Each day, that sound of the New York Stock Exchange's closing bell brings mixed emotions as the Dow continues its wild roller coaster ride. The Dow fell again on Thursday, continuing Wall Street's choppy ride and prompting many analysts to question any real impact from the US bank bail effort. While other markets, particularly in Western Europe, also showed seismic shifts indicating that the worst may be yet to come. Earlier this week, the U.S. Federal Reserve Chairman Ben Bernanke gave a dour assessment of America's economy, suggesting that more interest rate cuts could be coming. And in an effort to avoid facing the same problems as the U.S., European Union leaders vowed action to underpin growth and jobs threatened by the global financial crisis, but ruled out the prospect of spending their way out of a recession with a Europe-wide stimulus package. On today's show, we ask, is capitalism taking a pounding as Western nations try to handle the global financial crisis? Don't forget, we want to hear from you. Now, I have joining me to discuss events of the past few weeks, two guests with interesting perspectives. From Nashville, Tennessee is Yale professor Robert Shiller, who is the co-developer of the Standard & Poor's Case-Shiller Home Price Indices, considered the most authoritative sources on the U.S. house price trends. Professor Shiller got the nickname Dr. Doom after he accurately predicted the bust in the stock market bubble of the late 1990s. His new book is The Subprime Solution: How Today's Global Financial Crisis Happened and What to Do About It. And here with me in the studio is Lamont Bloomfield, President and CEO of the American Council for Capital Formation and a founding director of the International Council for Capital Formation based in Brussels. These organizations are dedicated to encouraging economic growth through sound tax, regulatory, environmental and trade policies. Gentlemen, welcome to the show.
Thank you.
Professor Shiller, if I could start with you. I know you're reluctant to take that Dr. Doom approach, but when people speak, you notice, and you recently said that you expected the downward sliding house prices and damage to Wall Street to exceed that of the Great Depression. Are you staying away from that prediction nowadays?
I get a lot of criticism when I compare with the Great Depression. I'm hopeful that we won't see anything nearly as bad as that. However, there seem to be a lot of parallels, notably just the volatility of the market. The stock market was extraordinarily volatile in the Great Depression, and it hasn't repeated, except for one little blip in '87. It hasn't repeated since until now. So we are in a very tumultuous period, and it's going to take very clear thinking on national leaders to prevent this from sinking into a severe contraction.
Professor, if I could put an email we got to you, our viewers take part with their questions. We should get some phone calls as well, I hope. But this one came from Vancouver in Canada, and our viewer by the initials MA wrote in saying, "The fact is the markets are a house of cards. It took decades to build them, and now they're imploding. Greenspan," referring of course to Alan Greenspan, "knew it all along. It's not that the government needs to instill confidence in these markets. Nothing can fix them." So I wonder, when so much of the world's financial and economic markets are pinned to confidence, surely it means that it's much easier to knock them down. How would you suggest restoring that confidence?
Well, you said the markets are a house of cards. I think it's not technical in the markets, it's people. The people's confidence have been hurt. I think that the really important thing to remember is that we just came out of a huge boom where confidence got too high. In fact, it got to what we call complacence. People thought that nothing could possibly go wrong, and it was a gold rush mentality. And so as a result, people took risks. And now we're seeing these risks unravel. And so that is a problem. We have to rethink the nature of our risk and be more realistic. And we also have to try and rethink how we do business so that we're not so vulnerable to this house of cards collapse.
Well, Mark Bloomfield, good to have you with us as well, sir.
Pleasure.
It doesn't seem like the bailout and buyout packages for the banks seem to be doing as much as the government hoped. I mean, what are the prospects when you see this lack of result?
Well, we have three problems facing us. One is the fundamental lack of trust, which you need in an economy. We've actually gone from worry to fear to panic. So that's the first thing that needs to be addressed. The second is our financial system, and I think what we have recently tried to do, our policymakers, is address that. The third is a recession or deep recession. So what they did initially is to try to address the credit problem, but now they have to address the real economy, and so the market reaction in that context is understandable because the prospects for recession are increasing.
The worry is when you say deep recession quickly, it sounds almost like depression.
Well,
are we redefining
as
where
Professor Shiller could comment on, what we've had in the Great Depression is we had a contraction of the economy of about a third. Yeah. We had unemployment at 25%. We're nowhere at that level in unemployment and certainly not a contraction. But given the whole new world we're playing with, I prefer saying a deep recession, but if government does bad things, it could be a depression, although I doubt it.
Now, in your opinion, who's being hurt the most right now?
That's hard to say. Obviously, the person who's about to retire is hurt in the United States because he's depending on his investments. The person who is trying to send his student to a place like Yale, one of the best universities, being hurt because he can't get a student loan. Somebody who's losing a job, somebody who's losing his home. So the people at the bottom scale are hurt. The middle class is also being hurt, but everybody could be severely hurt if we don't try to get our economy in better shape.
Professor Shiller, obviously a lot of people are very angry with the way things have developed, and they feel that basically the government hasn't taken care of the average person, that it's been the fat cats that have really benefited the most. I mean, when you look at it from your perspective, do you see that the average taxpayer has been reasonably protected?
Well, I think recessions or depressions tend to be periods of great anger because a lot of people are not being taken care of. And I think what's going on right now in the United States is that we're seeing about 10,000 foreclosures of homes a day. And these people are angry because they're not being taken care of. They know they're being thrown out of their house. That's not being taken care of. And that kind of thing happens. And I'm worried that we'll have a more angry sentiment for some time. It's really important that the government work on a plan that is perceived as fair, even though it can't be completely fair to everyone.
Professor, an email, if I may, to you. This one came from Mira in Georgia here in the USA, who wrote in saying, Professor Shiller, does this bailout meet the conditions that you have laid out in your book, i.e. maintaining a social justice component that focuses on preventing distress among people of modest means? If not, shouldn't you withdraw your support?
Well, I think I had both short-run and long-run proposals. In the short run, we have to patch the leak in the ship before it sinks. In the long run, we have to fix the ship. In the short run, I did actually call for bailouts in my book. However, I thought that the bailouts would be more centered on individuals. I'm concerned about the people who are being thrown out of their homes. It has developed in a different direction since I wrote my book. I had to finish it in June to get it published and out. Since then, it seems like the systemic effects of the collapse of banking institutions and investment banks have become much more prominent. And I feel less inherently enthusiastic about bailing out institutions like that. On the other hand, I think we have to do something for them too, because they are the financial infrastructure for our economy, and if we lose our banks, we're in big trouble. So in a sense, bailing out banks, if it's done right, is helping the common man as well.
Let's get a caller on the line from Nigeria. Twijani, you're on the line with us. What would you like to ask?
I want to ask a question, sir. What are the prospects of bailout to the middle class or average person paying tax?
Bailout for the middle class. Actually, perhaps Mark Bloomfield, I could ask you, what is the prospect of a bailout that might help the middle class?
Well, I think it's going to be addressed. I told you we went from dealing with the financial institutions, the credit, to now the real economy. And both presidential candidates have said that after the election, or they will move on an economic recovery program. In that economic recovery are specific provisions to deal with the hurting middle class. A moratorium of 90 days on foreclosures, tax incentives to hire new jobs, all sorts of other, not taxing unemployment compensation. So after the election, you may see a specific proposal directed at the middle class.
We had an email from Oklahoma in the USA, if I may put this to you, and it goes on about the presidential debate, the last one where the two senators, Barack Obama and John McCain, talked about Joe the plumber. And this email from Paige Michael in Oklahoma says, forget Joe the plumber. While candidates battle it out, I want to know, how did this happen? Do we need more regulation or freer markets? Right now, it seems to me Bill Clinton's right. If you want to live like a Republican, you better vote like a Democrat. Now, your organization is all about economic growth through sound regulation and policies. What's missing that allowed the U.S. to reach this crippled condition?
I don't think there's any one devil to blame. I think it's a question of financial innovation, which made possible the spreading of which made the free enterprise system stronger, which lifted a lot of countries out of poverty, is a good thing. So capitalism played its role. On the other hand, government policy in terms of modern regulation hasn't kept up, hasn't been changed for 75 years. There's another very important thing, and perhaps Professor Shiller would like to jump in. Some government actions actually brought this about by companies like Fannie Mae and Freddie Mae, which were asked to do things which were risky, like provide loans to people who could not afford them. We exacerbated the problem. So it's both the fault of the free market and the fault of government.
Professor Shiller, before I take our caller in Morocco, is that the case that the housing market seemed invulnerable?
Yeah, I think that I would add that an important reason that underlies all of these problems is the bubble, and a bubble in housing and also a bubble in the stock market, which is a social epidemic of sorts. It puzzles people that everyone got so optimistic. And I think that it is puzzling. It's one of the puzzles of human nature that people, there's a herd behavior. And we have to continually remind ourselves about what psychologists or social psychologists or sociologists tell us about people. We cannot, sometimes not see that we're participating in a social phenomenon that's making us too optimistic, too complacent. And that's the fundamental thing that brought us to this.
Well, Abdullah's on the line from Morocco. Thanks for your patience, Abdullah. What would you like to ask?
Good evening. To Nashville, is this financial dilemma or crisis going to affect military spending in Iraq and Afghanistan? Thank you.
Okay, Professor Shiller.
Well, I don't know that they're directly connected. I think that this does put the government in a bind, the U.S. government in a bind, but they also want to do deficit spending to try to encourage the economy. And so, you know, that war spending has always stimulated the economy. So I don't find it clear in my mind what the effect is.
Mark Bloomfield, would you expect far more regulation now, serious regulation, to come into place?
I think there is no question that there will be more regulation. The question becomes, is it going to be modern regulation or regulation for the sake of regulation? And more importantly, will there be unintended consequences? We don't want to destroy the strengths of capitalism. At the same time, periodically, as we did in the Depression, we may have to make adjustments for government's role.
What would be a new approach, you say, rather than having traditional or old regulation?
Well, for example, right now we have 5 U.S. Government agencies regulating deposits. We have 50 states regulating an insurance company. AIG, which you've all heard about, is regulated by 50 companies. We have one agency regulating securities, another agency regulating futures. So we have a patchwork system of regulation. But more importantly, other than unifying this, and we also have to deal with our international partners, we have to understand and modernize our regulation so it's more in tune with the new financial organizations and companies that exist.
And presumably a much more globalized world.
Definitely. That's one of the things that we've learned as this crisis spread, that it cannot be contained to one country.
Professor Shiller, there was an email actually that came in from Denmark, if I may, from Birgit Holden, who says, Professor Shiller, Adam Smith wrote about an invisible hand guiding the economy, but now the government's hand is very, very visible as it buys more and more banks and directly intervenes in the markets. Is Smith rolling in his grave?
Well, I find it difficult to understand what Smith would say, but I think that actually the capitalist system has always reacted this way. Whenever we've had a crisis, we've had financial intervention. Now, the U.S. used to be kind of smug about it. They criticized the Hong Kong Monetary Authority when they started buying stocks during the Asian financial crisis. But now we have a similar crisis, and we do the same thing. I think we just have to realize that capitalism is a useful institution, but it's a little unstable. And governments are always going to rush in at signs of depression and try to stabilize it.
And Professor, just on something that Mark Bloomfield and I were discussing a moment ago, the issue of how America's position in a globalized world might change in terms of regulation, in terms of being more cautious about how it moves forward.
Well, I think the real regulatory failure in the United States that led to this crisis was the failure to regulate subprime lending. And we had lenders who were really predatory. They were giving loans to people who would have a lot of trouble paying them back, especially in a housing crisis. And it was kind of rushed through the system and securitized and sold off all over the world. The U.S. should have stood behind having a sound economic system that doesn't abuse anyone. I think it was a problem that we did have many different regulatory authorities and they didn't coordinate. We have to clean that up and do a better job.
All right, gentlemen, I'm going to ask you to stand by. We've got to pause for a break, but after the break, we'll continue our discussion on the worldwide financial crunch and put it into the perspective of one small country that's actually facing bankruptcy. Don't go away.